The bottom line is the transports have this ongoing reputation. We've talked about it for years of predicting the economy. And the reason is because they move the goods. The underlying freight flow is the read on what's going to happen. So I can look at, say, the cash shipments index for September was up 8.2%. That's not indicative of an economy that's contracting. That's indicative of an economy that's expanding. I want to look at retail sales. I can look at, say, the Sonar head haul index coming out of the Chicago area, the Joliet area, and see it go from under 15 to over 100 in just the last 3 weeks. And I can see that that's a clear indication of the number of containers that are landing in that area that are going out to retailers that are getting ready for the holiday shopping season. And I know that's indicative of an expanding, a really strong holiday shopping season.
Those are positive indicators. As you look at the transports themselves, meaning the individual companies, where do you think the opportunity lies right now?
So we continue to love names like FedEx that deliver e-commerce, that have expanded their FedEx ground services from 5 days to 6 days. Continue to love names like XPO, which has been really not only the most prolific, but also the most successful acquirer of companies in the industry, and then takes these companies, integrates them, applies massive amounts of technology and innovation, and boosts the margins, and then turns what was accretive acquisitions into highly accretive acquisitions. And they haven't done one in a while, so we expect something out of them.
So when you look, for example, you look at a FedEx or an XPO, what do you think? Where are you putting that price in terms of your expectation next year, let's say?
Well, I think FedEx is every bit of a $300 stock a year from now. I think XPO is every bit of it is at $130, $140 stock in the next year. There's a significant amount of upside, especially now with, we've had this concern about, is this the top of the cycle? Is this a correction? Or is it a change in direction? And the freight flows clearly say that it's not a change in direction, that it's merely a correction. Right. And again and again, we literally, Andrew, you go back to post-World War II, so last 70 years, we've never had an expansion in the U.S. economy without there first being an expansion in freight flows. We've never had a contraction in the U.S. economy without there first being a contraction in freight flows.
How do you think about oil prices in terms of what it does to the margin of these companies?
Well, there's very sufficient and adequate fuel surcharges in place for the likes of XPO and FedEx, and for companies like J.B. Hunt, which we also are very positive on. They actually benefit from higher fuel because it drives more people to use their domestic intermodal services, so their margins actually improve when fuel goes higher.
Hey, Don, we just had a story talking about how U.S. shipments of soybeans to China are down 25%. It's part of the tariff story. There's got to be other areas where you're seeing an impact like that. How significant is it, or does this matter?
Well, it does matter, Becky, and it's a great question. And we're looking constantly at every little nook and cranny of the freight flows. And so you find instances like that where there's been a reaction. But broadly speaking, there hasn't been. We're continuing to see up and to the right in almost every single chart. So see little nuances in container flow. We saw a pull forward in the import containers in May and June, and a little bit of a lull in July and August. But then it's been just, balls to the wall going after it ever since then throughout September and even more so in October.